Uplifting news for NVIDIA. Oppenheimer is raising its cost focus on the chipmaker from $110 to $150 following its stock parted. The investigator behind the call says NVIDIA has a few tailwinds driving supported outsized top-line development. And Brad, this is one of a few cost target raises we saw, with examiners at Goldman Sachs and Argus Exploration likewise raising their particular cost targets. Presently, Argus expresses that there's proceeded with energy that we could see for NVIDIA partakes in 2025 after solid development in 2024. Thus, this is a stock that has recently been on such a tier, up around 150% year-to-date, and presently, these experts see much more space to run as they go past the server farm, yet additionally into open doors in a portion of their different region of the business. Definitely, Evercore, ISI, and Goldman had been out with their notes ahead of schedule to begin the week and end last week too. Thus, these things considered, there might be significantly greater moderateness, maybe, in the outlook of retail financial backers in NVIDIA, particularly as it's been discussed by Goldman Sachs as the true computer-based intelligence play. All the more as a rule, it's all the more progressively about where they can keep on seeing a portion of that chip interest, particularly as the remainder of the market is attempting to push toward applications. Also, this means the applications sitting on top of the models, which then, at that point, sit on top of the chips. Thus, assuming you've proactively got the chips, and the chips will keep on developing out, you contemplate the inferential innovation that these organizations were discussing at Computex a long time back, or only 14 days prior, where everybody was saying, certain, we have 60,000 chip server farms at the present time, yet that could undoubtedly get to a 1 million chip server farm that keeps on helping NVIDIA. That is the reason we have examiners come on our show discussing how, no doubt, this market cap that we've seen hit this $3 trillion imprint could simply be the beginning stage here, which is insane, particularly after the 10-for-1 stock split. One inquiry I had was, have we arrived at a roof, or is there more space to run here? Also reliably, we've heard from visitors on our show, experts, that there is more space to run in gaming and auto, two regions of the business that have some potential learning experiences. Definitely, NVIDIA is getting the best situating and height from Oppenheimer on this, from the full-stack artificial intelligence equipment, systems administration, and programming arrangements here. So we'll keep on following portions of NVDA over time. You were in NVIDIA before it was cool. You were getting it at $4 back in 2014. You rode the wave on this specific stock, Cathie, to $330 back in 2021. However, the new assembly you've missed on the grounds that the lead RK Advancement ETF sold out of your fundamental stake back in January. Why, indeed, so if you were extremely certain on NVIDIA, we've been extremely certain on NVIDIA. We got it down when it hit almost $100 in the final quarter last year, and afterward it significantly increased alongside a portion of our other computer-based intelligence situated stocks. NVIDIA's GPUs for the core of simulated intelligence applications, fueling a wide cluster of innovations, from self-driving vehicles to complex language models. As man-made intelligence keeps on altering various enterprises, the interest for NVIDIA's elite exhibition chips is set to rise. These GPUs are fundamental for handling the huge measures of information expected for artificial intelligence assignments, making them crucial in the ongoing mechanical scene. This flood sought after is expected to altogether support NVIDIA's income and profit, moving the stock cost higher. While NVIDIA presently partakes in a prevailing situation in the simulated intelligence chip market, it is not even close to careless. The organization is decisively venturing into new and arising areas like independent vehicles, mechanical technology, and medical services. These prospering business sectors offer gigantic development potential from NVIDIA. In independent vehicles, for example, NVIDIA's drive stage is as of now an innovator in giving man-made intelligence answers for self-driving innovation. Also, in medical services, NVIDIA's GPUs are essential for clinical imaging and genomic research. As NVIDIA keeps on hardening its presence in these fields, its stock cost is probably going to considerably benefit. Stopped, thus, we're checking out, in all honesty, Many individuals don't really accept that this about us. We're taking a gander at relative valuations of names in the artificial intelligence space. Furthermore, we were taking a gander at NVIDIA, multiple times deals, which is where it is, and Tesla. It actually meets our base obstacle pace of return, so 15% at a build yearly rate more than 5 years. Thus, you'll see it in a portion of our more particular portfolios. We're searching for the better qualities. However, the dangers to NVIDIA would incorporate recurrent elements. At the point when I hear deficiencies about GPUs or anything, I start to contemplate the cyclicality of a gathering contest. Tesla is thinking of its own chip, meta stages, Google, their own chips, for more specific huge language models, and afterward the actual tech. We're gaining from meta stages that the Llama model can accomplish more with less figuring power. However, more information, conveying better models is capable. Along these lines, there are puts and takes here, as there forever are. What number of disappointed financial backers have reached out to you through Twitter or different structures in which you associate with your own buys or the ETFs? At the end of the day, there's probably been a ton of dissatisfaction that you kept it in certain assets, however, not the fundamental ARK ETF. All things considered, I'll let you know what has happened for the most part. Individuals grasped the NVIDIA story. We were beating the table on it from 2014, truly till 2021. What's more, many individuals really put it in their own portfolios, that they might have held it. We have not gotten much pushback, and the explanation is individuals realize that we are on simulated intelligence. However, we're doing it shortly of a separated way. NVIDIA has turned into a check-the-container stock. That is the reason the valuation is where it is. NVIDIA has reliably revealed strong monetary outcomes with income and profit development outperforming industry midpoints. This solid monetary exhibition highlights the organization's authority in the computer-based intelligence chip market and its skill at profiting by rising patterns. NVIDIA's imaginative item arrangement, remembering the most recent headways for GPUs and man-made intelligence programming, positions it well for supported monetary achievement. As the organization proceeds to improve and broaden its contributions, its solid monetary establishment is supposed to help further stock cost appreciation. Money Road experts are predominantly bullish on NVIDIA's possibilities. Many anticipate that the stock cost will arrive at new levels before very long. This positive opinion is likewise supported by NVIDIA's demonstrated history of development and powerful execution. Examiners feature the organization's capacity to expect market needs and convey state-of-the-art arrangements, further supporting trust in NVIDIA's development direction. In any case, we are searching for those plays that poor person just the vision according to the supervisory group's perspective and expansive conveyance, yet in addition restrictive information and artificial intelligence ability. So we're simply turning to one more arrangement of plays that a great many people have not found at this point. Similar as they didn't comprehend that NVIDIA was a computer-based intelligence play truly until as of late. In this way, Palantir here you referenced. Or then again, UiPath, you referenced. Tesla, you referenced. There's quite a couple. However, it appears to be somewhat restricted, generally speaking. Computer-based intelligence-centered names that you have. Am I missing something? Are there undeniably more simulated intelligence openings inside your lead reserve, or would you say you are simply concluding that there will be a couple of key names you back? No. Twilio would be another name. Pretty much every organization, with the exception of, well, really, in any event, including the multiomics organizations like Precise Sciences, are utilizing their own restrictive information and their wide dissemination organizations to assemble data and make better items and administrations. So I would agree that pretty much every organization that we have in the portfolio is, somehow or another, shape or structure, tackling this useful asset called computerized reasoning. What's more, I would agree 90% of the names in the portfolio are tackling it and do have restrictive information. What grabbed my attention, and we've really seen such a lot of disturbance as of now to the market capitalization of organizations when they have ended up disturbed by, for instance, ChatGPT. I consider Ocean the training organization. In any case, You notice that Apple, for instance, its application stage could be disintermediated by ChatGPT stages. Is that a key organization that we want to stress over being upset? What different names do you figure strike a chord that perhaps the market misses the point entirely on the amount that could be overpowered by this new contender? Indeed, for Google, ChatGPT was either the most awful thing that has at any point happened to it, or